Assalamu alaikum and welcome to Islamic Finance TV. Today, we're diving into a topic that is truly shaping the future of global Islamic finance. Accounting and Auditing Organization for Islamic Financial Institutions Sharia Standard No. 62 on Sukuk. This isn't just another regulatory update, it's a profound shift designed to enhance the integrity, transparency, and standardization of Sukuk issuances worldwide. Understanding its implications and the industry's response is critical for every stakeholder in the Islamic capital markets. We're about to hear directly from the source. Today, we have the distinct honor of hosting a truly pivotal figure in the global Islamic finance landscape, the Secretary General of the Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI, His Excellency, Mr. Omar Mustafa Ansari. Thank you so much for joining us. So, sir, last year, reports emerged about a new AAOIFI standard that major rating agencies criticized. This prompted me to investigate, and I reached out to these agencies to understand their concerns. So my first question to you will be, given that AAOIFI developed this standard, I'd like to know why it was introduced, especially since another AAOIFI Sharia standard already addresses the Sukuk system.
Very much, brother, and thanks for kind invitation. Okay, first thing is, obviously in February there were some more news reports, but it was issued nearly 1.5 or more than that back, and since then we have been more than 2 years now, I think. I can't recall exactly the date. That can be checked with records, but nearly 2 years it has been out. We have already conducted lots of public hearings in multiple countries and online as well, and we are planning to do like a little bit more, like public consultation on that. But before coming to this, I think we need to go back a little bit about why AAOIFI is there, why AAOIFI Sharia standards are there. So we need to understand that when Islamic finance was very new in 1980s, there was a need felt by some of the large Islamic finance players at that time, which are quite large now. At that time, they were not that large, but they were still the largest stakeholders. And they felt that, including Islamic Development Bank and others, they felt that there is a need to standardize practices of Islamic finance. So they started with the accounting and auditing side, and we started developing our auditing standards, accounting and auditing standards in 1992. AAOIFI was constituted in 1991 through a mutual agreement, and then it was established in 1992. Now, 1992 means that we are talking about a quite fairly long time, 33 years. And obviously, in 33 years, industry has evolved, AAOIFI has evolved, our practices have evolved, Islamic finance practices, number of products, number of instruments, related regulations, everything has evolved significantly over a period of time. So effectively, the whole process of standard setting is not what I say, that it's not stagnant. Obviously, it has to always be a proactive, it's sort of process that responds to the industry needs, that responds to the stakeholders' needs. Now, why do we have the standardization? Standardization is to have confidence of the stakeholders on the instrument. So on one side, it has to make sure that the instruments and the products that are there in different parts of the world, they are all acceptable to each other, they are adaptable to each other, they are at par with each other. I normally give example of this thing like, that you have these plugs and sockets. So every country have their standardization for plugs and sockets, and every plug doesn't fit in every socket, but for ensuring that you can establish things in a proper way, you need to have the right set of plugs and right set of sockets. One part is that plug should fit in the socket, but the second part is that there should be no short circuit. Plug should not be loose, plug should not result in damage, it should not result in a short circuit, it should not result in a situation that people are impacted. And that is the real issue of standardization, that on one side we want uniformity, but at the same time we want to have the right benchmark set, the quality benchmarks, so that while we work on different parts of the world. So if I belong to Pakistan and I work in Bahrain and I may have transactions in UAE, all these situations, I should have a confidence that I'm working with banks who are having the same set of products with the same set of harmony and standardization, that I can rely on each one of them. That is part one, the uniformity part. But then it comes to the short circuit. There should not be a short circuit. There should not be like, so the benchmarks in terms of quality, in terms of compliance with Sharia, in terms of stakeholders' interest safeguard, in terms of appropriate reporting and recording and reporting of transactions. All these things should be according to the top quality standards set for the industry. Here, I'll take a couple of more minutes to explain one thing. We need to understand that Islamic finance is different. Islamic finance is different from conventional finance. And if it was not different, it was not needed. Conventional banking was already there. Conventional bonds were already there. Why you needed Islamic finance? You need it because we as Muslims have a set of Sharia conscious investors, stakeholders who believe that they cannot go to the conventional instruments, conventional banks, conventional institutions, because that is again against our fundamental beliefs as Muslims, that it involves prohibited transactions. So Islamic finance evolved because it was different. But I have another strong view. I say that if it is not different, it is not Islamic. We need to understand that the purpose of having Islamic finance was that it was different from conventional, so we evolved it. Yes, we live in a system which is not ideal Islamic system. We live in a society which is not ideal Islamic society. We work in a legal framework, accounting framework, regulatory framework, which is not primarily Islamic. But so at times we have some little bit of compromises to adjust to the legal system in which we are working. But it does not mean that we can agree on something fundamentally not being halal to be promoted as halal or sold as halal. This is the function of AAOIFI. That's what we are trying to do. We try to make sure that Islamic finance is different. It has its unique set of characteristics. There are unique transactions. Their products and services are different. So we develop standards in the area of Sharia to identify what are the Sharia principles and rules for these products and services. We develop accounting standards to ensure that these are recorded and reported in line with their true nature and in line with the Sharia principles, and the profits and losses and everything is calculated according to that. We develop governance standards to ensure that there are proper set of governance principles and controls in place to ensure that the Sharia principles are properly integrated in the system and properly implemented. Because if you don't implement them properly, there is no point of having a bunch of paper. Na'uzubillah, you cannot make fool of Allah subhanahu wa ta'ala by just making a bunch of papers and saying, oh, we have this Sharia compliant. No, you need to have the whole ecosystem, and then you need to have the ethics as the soul of Islamic finance, and you need to have a check and balance mechanism that we have in form of financial auditing and Sharia auditing standards. So this creates the whole ecosystem of standardization for Islamic finance that ensures things are on the right way. So sorry, I took some time in preamble, but now that I think we have clearly set the tone that was needed here. Now we come to your specific question, why we are revising this standard. Because when it was developed, Sukuk industry had not evolved enough. It is 20 plus years old standard. Sukuk industry was in the initial stages. Lot of new products and services in the name of Sukuk that are actually introduced later were actually not there, and you learn from your experience. So you learn, and not only this, there were certain other areas which were not covered in our standards before that time. So for example, Wakala bil Istismar Sharia standard was issued later. So anything related to Wakala bil Istismar Sukuk might not have been covered in Sharia standard number 17, which is currently there. So there is nothing wrong with Sharia standard number 17. All the core principles written in Sharia standard number 17 are perfectly valid, and they are being carried forward in Sharia standard number 62. But what is happening is that the new type of products, new type of Sukuk, more clear market practices, they have made us learn that there are improvements needed in the Sharia practices that are being followed. Not only this, at times you just write a core principle in a standard. But there is a time when it feels that writing of the core principle has resulted in differentiating treatments in the market, because different people, different scholars, different markets, different players, different stakeholders, regulators, they interpreted them in a different way. So it means that there is a time when you realize that that core principle need to be explained in a bit detail. And additionally, Sharia standard number 17 was leaving so many things to the respective Sharia standard. This standard also leaves those things to the respective Sharia standards, but it tries to bring all the things in one place so that maximum of the information needed for Sukuk is available at one place. This is particularly important because at times some of the regulators adopt our limited standards. So for example, if the Securities and Exchange Commission or Capital Market Authority of a country adopts only the Sukuk standard, it means that it is better to have it comprehensive so that we can have, this has been the thought process, they have it comprehensive so that everything is available at one place. Now, nothing wrong with Sharia standard number 17. What we needed: explanation, expansion, coverage of new products, and trying to address some of the market practices that were not available at that point of time. Some were Sharia compliant, which we addressed as it is. Some had certain Sharia issues, so we identified those issues. This is the fundamental aspect of why we needed a standard on that part. I'm sorry, again, I took a little bit more time because I felt that just going to this question without going to the background of what is our approach as AOIFI towards standard development, that part is not there. So this is like, this standard number 62 is still in exposure draft stage. A couple of weeks back, 3 weeks back, we issued a press release by our chairman that because of the market challenges and issues, we are going to take a little bit more time in in having further stakeholder comments and trying to address this one.
Thank you for the clear explanation. It also answered my second question. I believe if you want to sum this up, then it would come down to the evolution of Islamic finance meeting the future needs. My next concern is the havoc I perceive among rating agencies. Fitch, Moody's, and S&P Global, along with some experts, view this as a significant change that could disrupt the market and potentially lead to a decline in Sukuk issuance. How do you assess or respond to these concerns?
Now, this question has multiple aspects, so let me take them one by one. Let me first take why rating agencies and lawyers in particular are against this standard or are criticizing significantly this standard. Let's first try to understand. Let's try to understand their mindset and their thought process. So they are primarily coming from the conventional mindset. Additionally, they believe that their main stakeholders that are investors of Sukuk are also having the same conventional mindset of having maximum security of the instrument, and they feel that these are to be dealt with exactly like bonds or more or less exactly like bonds. And that is where I touched upon this point. If it is not different, it's not Islamic. Now, let's try to understand that till now, a lot of rating agencies and lawyers use in the standardized documentation for Sukuk as the term obligor. Our standard issues issuing entity or originating entity, originator, not obligor. We believe that most of the Sukuk do not have a obligor. Obligor means that you create a direct liability on the party. We say no. Sukuk is permissible. Let's try to understand one thing. Allah subhanahu wa ta'ala says, وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا وَيَقُولُونَ إِنَّمَا الْبَيْعُ مِثْلُ الرِّبَا وَيَحِلُّ اللَّهُ الْبَيْعَ. And it means that trade is permitted, riba is prohibited. Trade, where on one side you have money and one side you have goods, assets, services, economic resources of different form, venture, investment. These are the things that are permissible, and money on both ends is not permissible. Now, creating obligation or creating an obligor, that fundamentally speaks of the mindset of the stakeholders. And again, they are right in their framework. In the framework that they are talking, they are correct. I'm not saying that they are saying wrong in their framework. The problem is it's the framework of mind. It's the frame of mind on which you talk. Their frame of mind is that they believe that the fundamental methodologies that they use are about rating the credit worthiness of the obligor. They believe that the main investors or the main stakeholders who are there, they are concerned about the credit worthiness, and the sukuk should be structured in a way that the direct liability of the party, like a conventional bond, should be established. We believe that this in most situations is not possible, and if it becomes possible and a credit is created, then the sukuk is not tradable. Because you cannot, this comes into then sale of debt. So we believe that fundamentally sukuk has to originate its return and principal repayment out of the underlying assets or underlying venture. This is the fundamental difference between the thought process. Now, they have a debate about asset-based versus asset-backed. Asset-based approach is like, that, okay, you create asset on the back end just to link with them, but really you create a direct obligation of the obligor. We believe from the Sharia standpoint, fundamentally, it cannot happen exactly the same way as conventional. So while we fully understand the concerns and we fully appreciate their concerns, and we are trying to take their concerns into account as much as possible, but that fundamental issue will be there. Sometime back, AAOIFI issued 2 standards on Sharia compliance and fiduciary rating. One is on GS 10 on Sharia compliance and fiduciary rating for the Islamic Financial Institutions. And later we issued, I think, GS 17 or I think I just need to recheck the number, on Sharia compliance and fiduciary rating of the Islamic finance instruments, including Sukuk. Now, we believe that Islamic finance instruments are not about credit worthiness of the customer only, but they include the performance of the underlying assets, because they are linked with the performance of the underlying assets or the venture. Now, for rating agencies, they say that it is not in our mandate to value the assets or see the performance of the assets or to assess the asset management quality of the obligor. We believe that we create a structure in a way that obligor has a purchase undertaking or guarantee or something that puts all the liability onto him. This thing, now, we live, as I said, we live in a system which is not predominantly Islamic. We still live in a society which is not predominantly Islamic. We live in a rating legal system, regulatory system, which is not predominantly Islamic. It's all meant for conventional. So now this is the issue of how to integrate the two. AAOIFI at its level tries to integrate the two as far as 2 conditions are met: Sharia principles and rules, and then the unique nature of the structure and the institution. When we do our standards, including accounting, governance, and all these standards, we try to ensure that we take benefit of the conventional standards, but we adjust them to suit the Sharia compliance part and the specific nature of the Islamic financial institution and instrument part. Here, the problem is no compromising situation, because they come from a different regime. We come from a different mindset. Their regime is not primarily Sharia. They say you have to comply with Sharia as much as you can, but you need to create the structure in a way that it creates an obligation, so that Sukuk becomes just like a bond. On the back end, you have Sharia compliant papers. We believe just making a bunch of paper doesn't make anything halal. Allah subhanahu wa ta'ala will not be, na'uzubillah, may not be fooled out of it. Having said that, now let me tell, this is the key difference with lawyers, rating agencies, some of the regulators, some of the issuers, some of the investors. Now it's a mindset issue. It's the regime issue. How we try to address. We believe that we are trying at this point to try to address their points as maximum as possible without compromising with Sharia. So that is the reason that we are taking more and more time in finalizing this standard, and will be going through further consultation, and the standard may take a little bit more time, because we will try to re-evaluate what we have written in the standard. And again, I'm talking on behalf of the Secretariat. I'm just talking what we understand from the views of the Sharia board and the overall views of AAOIFI Board of Trustees, that we need to give it more time. But one point is clear. We are not here to compromise on the core Sharia principles and rules. This is like, what you say, that is it's the end point where we cannot have any more compromise. So whatever is possible within Sharia, now there can be situations like ownership. So Sharia requires ownership of the underlying assets, but how that ownership can be established in the legal system, this is something that we may need to reconsider again before we finalize the standard. Or we may leave it to the respective regulators or the respective country's legal system to be assessed in line with the core principle by the respective Central Sharia Board or the Sharia Supervisory Board. I'm just talking broadly. I'm not concluding on behalf of Sharia Board. Obviously, our Sharia Board is independent and they will conclude based on that. This is sort of like, public hearing comments and our recommendations that we are passing on to them. Last point. You said industry will be impacted, deteriorated, industry will be killed. We are receiving this thing, it will kill the industry and all that. I can tell you in 2008 crisis, at that time, AAOIFI issued a statement that Sharia principles are being compromised on some sukuk. And when we issued the statement, everybody stood up and said, oh, industry will die. Alhamdulillah, industry did not die. 4 years back, we issued Shariah Standard No. 59 on sale of debt, which addressed the issue of hybrid sukuk and the tangibility and tradability criteria. We received hundreds of comments, people standing up, giving public statements, oh, industry will die. Alhamdulillah, industry did not die. Alhamdulillah, it has continued to grow. I can assure you, even if we finalize the standard as it is, inshallah, industry will grow. We have no single doubt about this thing. However, we believe that it's not an issue of arrogance on our part. It's the issue that we are still open. We are still trying. But we are saying that don't give us an argument, oh, industry will die. Don't give us an argument that, okay, this is being done in the market, so it is halal. No. Give us an argument that according to the legal system, how this thing can be adjusted by ensuring Sharia compliance in its spirit, without compromising on the Sharia principles. Some people say our Sharia board approved this thing. Why your Sharia standard is not approving? I said, thank you very much. I highly appreciate if you provide the basis of conclusion as per Sharia that your Sharia board applied in your sukuk structure, so that I will take them forward to the Sharia board and will say, see, these are the respectable scholars who approved this product. They have used these bases of conclusion. Please re-evaluate your view in line with these bases of conclusion. Not on this argument that I can tell you, then there was an argument, there was a time that people said, and the fatwa was there, that there was no Islamic banking, and people said, oh, if you don't allow Muslims to go to conventional banking, Muslim Ummah will be disturbed in regard to, like, the economic growth and everything. They will be compromised and this and that. Haram is haram. Haram is haram. We are answerable to Allah Almighty. We all should ask ourselves, me as a person sitting at AAOIFI, you as a person trying to promote Islamic finance and try to educate people who are sitting in rating agencies, law firms. What are we trying to do? Are we trying to genuinely promote Islamic finance in line with Sharia principles, or we are putting the commercial interest above the Sharia principles? Yes, Sharia principles don't ask you to compromise on commercial interest. They ask you to have commercial interest. They allow you to have commercial interest, but within the parameters defined. Are we compromising on those parameters? And they say that don't destroy. There's a saying of Taliban Hazrat Ali, but somebody says that it's a hadith as well, that don't destroy your akhirah for the benefit of others' dunya. Yes. We are not here for that purpose. We are given a specific task. We are appointed for a specific task to try to ensure Sharia principles and rules and obviously promoting Islamic finance in line with the right foundations. And that is, I can assure you that while we are still open, we are going to take more and more arguments. But let me again emphasize, we need arguments that can convince my Sharia board. I don't need an argument, oh, it will die. Sorry, this is not a good enough argument. From how I can go and ask my Sharia board members that because other people will not be able to do sukuk and they will, so you just approve something which is not Sharia principle as per your understanding.
Exactly. Thank you so very much. This was a very crucial perspective because I've been speaking with the experts here in Pakistan, Mr. Ahmed Ali Siddiqui from Mizan Bank and Mufti Syed Muhammad Abu Bakr from Dubai Islamic Bank. And the one thing that was common when I came to this point was that disruption is normal and noise is always there, but whomever is going to be interested in Islamic banking, Islamic financial principles, they're going to invest in Sukuk anyway.
Oh, I'm sorry, I'm interfering here, but let me try to quote one very respectable scholar, Dr. Sami Sualam. Dr. Sami Sualam is very respectable as an expert, as a scholar, and he's acting director general of the Islamic Development Bank Institute. And he said in one meeting that I have quoted several times, he said that at times these rating agencies, and they have an argument that our investors don't agree to the real asset-backed sukuk. They want a credit-based institution, a credit-based instrument. So he says that at times it is possible that you are having an orange juice which is halal and you are trying to sell it in a market which is for alcohol. You may always try to find a market. You can always try to find a market for the halal thing. But that might be a different market. That might be a different shop. You take it to a pub, nobody is buying it. And they say, no, we need orange juice with the characteristics of alcohol. Mix half of alcohol into that. No, let's try to understand. This is a very important point that at times we are trying to do business only with those people who don't care about Sharia compliance, who are agnostic. Yes, to some extent, these things are relevant. I'm not saying that it's not relevant, but the point is there is a huge population outside of it which might be completely willing to have Sharia compliance, and that is today out of the market. Today, that is not there.
A very relevant example, and I'm just going to add one thing and then I'm going to move to my next question as we are a little short of time. So basically, I see this happening in Africa and Russia right now, as there's so much going on in there and which are not predominantly Islamic or Muslim countries. So yes, just a brief comment from you. Will major transformations like this, standard number 62, are going to deem these rating agencies irrelevant in the future?
No. The point is today, okay, let me give you an example. Two of the big three rating agencies, now they have second party opinion on ESG bonds and ESG, sustainability, ESG bonds, green bonds. They acquired whole subsidiaries, huge subsidiaries to work on the green bonds and green sukuk and sustainability certification. So that is not called a rating, it's called second party opinion. So they are doing it second party opinion because there is market. So if everybody stands up and says we will do sukuk only as per Sharia, I can assure you they will be opening up departments that will be working on the Sharia compliance and fiduciary rating. Because they are in business. They are in business. Let's try to understand. Again, we have respect for them. They are very professional people. They are very competent people. But they feel Islamic finance is very small to their scale. Why they should invest into that scale? And particularly when they feel that a large number of their stakeholders, issuers, as well as investors are more concerned about bond type instrument and not a real instrument. There is, again, but I can tell you, again, one last thing. If they become relevant, there are a lot of conventional banks that can become irrelevant. And I can tell you banks can become irrelevant because they don't move to fintech. If they don't move to fintech, if they don't move to digital banking, even the largest banks will become irrelevant. There are times of change in the system. There are times. So, okay, yes, we know Islamic finance is very niche market today, still niche market. We know that we have these challenges about structures and all these things. And again, one last thing, I'm not saying what is happening in the market is haram. I'm just saying that we are trying to work in a system which is not predominantly Islamic. So we try to carve out something Islamic within that system. What we are trying to do is trying to ensure that this carving out is standardized. Still, there might be some of the compromising elements like ownership title not officially being transferred and keeping in agency. Just one example. This is still acceptable as per AAOIFI. This is a carving out within that one. But this one says that at least in the event of eventual default, there should be recourse to the assets. Now, if the lawyers and rating agency come to me and say, no, even in the event of default, we don't want recourse to the assets, then I say, sorry, then it might not be really Sharia compliant as per what my Sharia board has ruled out. And I can tell you that what they have written is there everywhere in Islamic finance literature. It was everywhere there in Islamic fatwa. They have not invented Sharia. Sharia is already there. They have just defined Sharia and they have just interpreted Sharia in the given situation. So yes, the Sharia Standard 62 still provides lots and lots of flexibilities. It's not that it doesn't provide any flexibility. It's very rigid. No, but it puts like, there is a point when you put foot and you say, no, this point forward, you need to stop.
Precisely. Thank you for the clarification. My next question is drawn from the rating agency's feedback concerning sovereign sukuk, specifically how nations will use assets to back these instruments.
There is an issue that, let me tell you a quick answer. There is an issue that some of the governments have an issue that they cannot sell the government assets, or they cannot provide a direct recourse on that. So there are two types of situations. One is like Pakistan-like situation that a lot of countries have established their own SPVs that hold those assets. So at least a minimum level of Sharia compliance is addressed there. Then there is another approach. There are new structures coming up like Egypt, and where it is created based on usufruct and not based on the asset. Assets usufruct is used as a basis. So my point is that solution can still be provided to the sovereigns. It's not the issue that sovereigns can find a solution. And I can tell you, sovereigns normally have assets. The only issue is that we as at times we are lazy in finding out the assets. Do you think Pakistan may not have total amount of assets that can be used as a basis for sukuk? I can assure you that is there. There are two challenges. Number one, asset listing and valuation is not available. Second issue is in Pakistan after 18th Amendment, a lot of assets have been transferred to the provinces. So what you need to do, you need to take provinces on board. You need to take their assets with a federal guarantee. You can use them as the federal sukuk. Similarly, for the federal government assets, it's still 100% of the assets are not fully used. Just think of the land that is available with Pakistan Railways. It's huge. It's huge. Wagda. Again, some of the WAPDA assets are covered, but I can assure you, and not only this, the hospitals, the schools, whatever, these are the things that have moved to the provinces. Provinces have huge lands which are still available. Exactly. This is not an issue, and not only this, Sharia allows you to have on the revenue stream. So, for example, government holdings. Government holdings gets 5% of every oil and gas exploration in the country. You can have long-term sukuk based on government holdings, a share in the reserves of all the hydrocarbons in Pakistan. There are a lot of opportunities like that. I can assure you that if you try to find out assets and the identified clear revenue streams which are needed for sukuk, you will find in most of the countries you will find. It will be very rare in some countries where there can be challenge. Like, for example, I can tell you, like countries where the banking assets are more than GDP. Like in Bahrain, they are 6 times GDP, or in Lebanon, they are 3 times GDP. So what happens that in these situations, the amount of sukuk or the amount of government borrowings may be significant, and you may not able to, because of the small size of the country, you may not be able to find. But for that, you can find other revenue streams, hydrocarbons and others. But in case of Pakistan and that type of countries who are huge and have huge potentials, there are identifiable assets and identifiable streams of revenue that can be used to a significant extent. And one last thing. People say Islamic finance is fake, Islamic finance is this and that and this and that. I used to say that Lula Langda Islamic finance, and even this Lula Langda Islamic finance, if you apply it properly. So, for example, at the time of Pakistan Constitution, Pakistan's foundation in 1947, if you had decided that you will go only for Sukuk and not for any conventional borrowing, would Pakistan be stuck with this form of leveraged debts? Not possible. You can borrow only to the extent of your asset. You cannot borrow for the operational expenditure. You have to borrow only for infrastructure. So a financial discipline is integrated in the system. Even if this Islamic finance is not perfect, but even if this Lula Langda Islamic finance can take you to that level that your government becomes financially disciplined.
Exactly, inshallah. And thank you so much, sir. But there's a supplementary question I want to ask that I have been thinking about. You explained very well that how Sukuk can rehabilitate Pakistan's economic problems and help solve them. But could cities, local governments do the same? Could Sukuk help, say Karachi, for instance, solve its infrastructural issues?
Exactly. This is the point that even the provincial governments, the local governments, they have always assets. Those assets can always be used for that one. It is not necessary that when the federal government issues Sukuk. Let me give you an example. There is a small state of Saxony in Germany that issued a Sukuk. So it's a state Sukuk. And you can consider it like a local government like instrument that you are talking about. So Saxony and Anhalt, as a state in Germany, not even in a Muslim country, they issued a Sukuk some time back. So you can find examples like this everywhere. That there is a huge opportunity all the time for that. That even the local governments and the provincial governments. For example, provincial government again has the same issue. They have borrowings from central bank and they have borrowings from the federal government, and the federal government borrowings are transferred to them. Now, provincial governments, if you see, they have lands, they have health infrastructure, schools infrastructure, so many things that they have that they can still try to find out great structures for them. And that, again, the point is, you need to have better governance. Governance is the key. If you have governance, all these instruments will work. If you don't have good governance, it will not work. But the best model is, don't take it to the local government level, keep it to the provincial government level, and provincial government can identify all these assets, create Sukuk on that, and that Sukuk can be guaranteed by the federal, so it becomes equal to a sovereign Sukuk.
Thank you so very much, sir. And to wrap all this, just one last question. What is the timeline on Standard 62?
At this point of time, timeline has been halted, because as I mentioned to you, there was a press release issued that you can find on AAOIFI's website 3 weeks back. The idea is that we have received so many comments, so we want to take a little bit more time. So at this moment, there is no urgent timeline at this moment. We are trying to re-evaluate the comments. Maybe we'll go for further rounds of roundtable and other comments. We may come up with a different strategy. The idea is that we don't want to impact the industry. We want to take industry along. We are an industry body. We are an industry representative body. We are representing the same stakeholders who are having these challenges. While we cannot compromise on Sharia principles, but we can try to find solutions within Sharia principles. That is what we are going to try to do. This is something that has put us onto a halt at this point of time. So at this moment, I cannot give you a timeline. Earlier, our plan was to finalize it within this year. But I think now within this year, it is not possible to finalize, considering the additional considerations that we have now recently talked about.
Brother Omar Mustafa Ansari, on behalf of Islamic Finance TV and our entire team, I want to extend our sincerest gratitude for your invaluable time and profound insights today. Your leadership at Accounting and Auditing Organization for Islamic Financial Institutions is truly instrumental in shaping the future of Islamic finance. And this discussion has been incredibly enlightening for our audience.
Real pleasure. And it was a great pleasure talking to you. Thanks for very insightful questions, actually. And looking forward to be in collaboration. Okay, then. Assalamu alaikum.
And to our viewers, thank you for joining us for this special interview. We hope this deep dive into AAOIFI's Sharia Standard No. 62 provides a comprehensive understanding of its objectives, implications, and the path forward for the global Sukuk market. And with this, get ready for our in-depth video feature exploring AAOIFI's Sharia Standard No. 62. We've gathered key insights from experts, institutions, and even brought in perspectives from leading rating agencies, Fitch and S&P Global, to bring you the full story. Stay tuned to Islamic Finance TV for more in-depth analyses and discussions. Assalamu alaikum.